Q4 of 2025 could be massive for crypto. Bitcoin just smashed a new all-time high, over $125,000 per coin. But what exactly is driving this rally? And more importantly, is it sustainable? Stick around as we break down the 4 key catalysts fueling this surge. Let's start with the real driver that often gets lost in all the noise surrounding the crypto world: the global M2 money supply. M2 is basically all the money in the system: cash, checking, savings. And it goes up when governments print money or lower interest rates, and down when governments raise rates or pull money out of circulation through things like quantitative tightening. When that number goes up, Bitcoin usually follows. Check out this graph showing the M2 money supply versus the price of Bitcoin over the last 10 years. In 2020 and 2021, after all the COVID stimulus and lower interest rates, Bitcoin ran to over $60,000 per coin. Then, in 2022, the Fed tightened up, increased interest rates, and crypto cooled down. But now, in 2025, the Fed's cutting rates again and signaling 2 more cuts in Q4. Global money supply is rising, and so is the price of Bitcoin. More money means more liquidity, and more people looking for assets that hold their value. And it's not even just Bitcoin. Gold's been ripping too. Next, the US government shutdown. The US government shutdown in early October reminded everyone that even the world's biggest economy can also run into trouble. When lawmakers can't even agree on a budget, trust in the traditional system starts to crack. And that's exactly why Bitcoin exists. Satoshi, wherever or whoever they may be, invented Bitcoin after the 2008 financial crash as a response to the broken system. A way for us to opt out, to have a financial system that doesn't rely on trust or politicians. It's borderless, decentralized, and built for moments like this. Third, and one of the biggest stories this cycle, the rise of digital asset treasury companies, or DATCOs. These are public companies that acquire and hold crypto on their balance sheets as the core part of their business. Think Strategy, formerly MicroStrategy. MicroStrategy started the trend in 2020 when Michael Saylor purchased 21,000 Bitcoin. Now, they hold over 640,000 Bitcoin, worth over $47 billion. And they're not alone. 171 public companies now hold crypto. And it's not just Bitcoin, but Ethereum, Solana, and others. Just last week, BitMine's chairman, Tom Lee, purchased almost $1 billion worth of ETH to add to their treasury. Imagine what happens if normal corporations started allocating 1%, maybe even 2% of their balance sheet into crypto. That's a flood of capital waiting to happen. And finally, institutions are starting to catch up. The Bitcoin ETF is one of the best performing ETFs in history. Even Vanguard, long known for being anti-crypto, is reportedly considering allowing Bitcoin and Ethereum ETF trading on its platform. That's over $11 trillion and over 50 million investors, one click away from crypto exposure. If that happens, we're not talking about a small inflow. So, before 2025 comes to an end, step back and look at the big picture. The Fed's cutting rates again. Money in circulation is rising. Companies are adding crypto to their treasuries, and traditional institutions are finally joining the party. Q4 isn't just a good quarter. This could be the moment that crypto goes from alternative investment to mainstream macro play. If you guys found this breakdown helpful, please subscribe to the channel and tell us in the comments which catalyst you think is driving this bull run the most. See you in the next video.